In general, everywhere in news or in budget or in economic survey, everywhere a lot of talk is happening about the market capitalization, about the growth in the stock market in India. Many of your friends and family members will ask you, is it good time to start investing in shares, or shall I go by mutual fund route or SIP? SIP is the new favorite of Indian customer. What is happening from the retail side? Forget about what advice you give to your friends and family. More important is how do you take up this question when it comes in the exam. Participation by retailer is one is direct trading in the market by opening the demat account and a trading account, and indirectly through mutual fund. You invest in mutual fund and the fund invest in the market. It is in equity market or debt market depending on the kind of mutual fund you have chosen. Today, if you see mutual fund, which is indirect participation by the retail, 53 lakh crore rupees. YOY growth is 35%. Total number of the folios increased from 14 crore to 17.8 crore. And most interesting one is SIP, Systematic Investment Plan. Many people don't understand what they are doing, but they are investing in SIP because that is considered the safest route. See the year-on-year growth. In last year, 57% growth here. Now you understand why our stock market is growing so fast. 57% growth in SIP. Number of account also grown 34%. So people, those who are investing more, and more number of people are joining here. It all started during the pandemic time. There is easy access technology. There are apps which are not charging you anything in terms of the brokerage because these are funded companies. A small amount you can invest. There is more financial inclusion, penetration of the smartphone, and young generation which wants to make quick money. Why I am using these words here? Because you have to be careful. There is no quick money, and that's why government is coming out with a word of caution. Though there are many measures by the government to facilitate online resolution, faster settlement, the number of unique tax IDs registered on NSE rose to 9.2 crore. The biggest risk is in the derivative trading because then it is very closer to the gambling. People don't understand the F&O segment well, and I have also discussed earlier about the various publications including by the SEBI that 90% of the retail investors lose money in the derivative segment, in F&O segment. And see here, the economic survey also mentions globally derivative trading lose money for the investors for the most part. Investor awareness and continuous financial education is essential to warn them of the low or negative expected return from these derivative trading. Otherwise, they will feel cheated when the market will fall, and they will not return to the capital market for a long time. The market itself is not wrong, but the way people invest and think that they can make quick bucks in the market, that is the problem. And already market has grown to a very high level. Therefore, government is coming out with a lot of caution. We must understand this. It shall not lead to the kind of irrational exuberance that happened at the time of 2008 global financial crisis. Here, one side, the stock market is telling strong growth story of India, but other side, there is a need of caution. Especially the retail investors' money shall not be lost to have continued confidence in the market. Do you think this is useful? Please like the video and subscribe to the channel. We are here to make your job preparation 50% faster.